Hey, good morning. This is Mayor Valensky with Driving Markets. Okay, so first of all, I'd like to wish the Queen of England a happy and pleasant Jubilee. Congratulations on a Platinum Jubilee. The whole of the UK is on a bank holiday weekend, and I'm a big fan of the Queen, so I'm all for it. So we'll do a very short broadcast today just to in honour of the Queen, and I'm sure she's a big fan of Driving Markets. In fact, I'm trying to get her to subscribe either on YouTube or on Instagram, but she's not responding at the moment. I have contacted Windsor and Buckingham Palace, and they said she will look at Driving Markets going forward, but she's got a lot on her agenda at the moment. So if you are listening, Your Majesty, then this Driving Markets is dedicated to you. Anyhow, so let's just move on to where we're at financials. The markets did jump yesterday significantly on the back of a couple of factors. CRM, Salesforce, jumped up with not only beating expectations, but its forecast going forward was extremely significant, and it is very, very bullish, and that pulled up all the tech sector. Also, Tesla jumped up on the back of China reopening. If you remember, China, Shanghai has already been in lockdown, but Tesla jumped up on the back of China reopening. Oil came down because OPEC will be or is looking at increasing production. So let's just go into a bit more detail on those factors. Now, remember the NASDAQ. I'm a big bear on the NASDAQ, and I've said from the beginning of the year the NASDAQ's going to go down to about 7,000. Reason being on that is because yields on the 10-year US Treasury and interest rates are rising, and anything to do with rising interest rates will hammer and trash the high-tech growth stocks, whether they're startups or whether they are established companies, because they're high risk and because they are high risk, high notional value, got zero value to them and don't produce any profits. Then what happens is that growth sector, when it comes to rising interest rates, is the first one to go down, and that's what's happened over the last few months, and it probably will continue. I get many comments from viewers that tell me that if the NASDAQ's going down, why has it jumped 2%, 3%, 4% in one day? I did not say it's going to go down in one straight line. In fact, if it went down in one straight line, that's an unbelievable sign of a complete and utter capitulation. There's always going to be ups and downs and bouncing around, but as I said over and over again, the general trend is down. Look at the trend. The trend is down and going to continue being down as long as interest rates rise. Now, another factor came out yesterday you've got to look at is the price of copper. The price of copper went up by 5.6%. Now, normally copper is a big bullish sign for commodities and a big bullish sign for the economy, because copper is used in practically every aspect of the economy, and therefore when copper goes up or the demand for copper goes up, then that is a general bullish sign regarding the economy. There is a correlation between the S&P Standard & Poor's rising when copper rises. If you look at the graph, they correlate one to the other. So that would be a very, very interesting sign to see that if copper continues rising, then are we going to enter a new bullish run? Well, it'll be one of the first if we do enter a bullish run with rising rates and rising yields on bonds, and we go into a new financial bull run on markets. That would be a first timer as far as I'm concerned, and I've been in the market over 25 years, so I'd like to see that happen, and that would completely contradict and negate all of my view that the markets are going to go down. But I don't believe it, and I don't buy into it, because 10-year yields are running at 2.92%, and the stock markets hate high yields on bonds because it pushes everyone away from investments in stocks and shares over to solid investments where bonds, the greenback and gold. So it might be just a one-day jump. I don't think it's a trend, but it was a real indicator yesterday, and it did raise eyebrows amongst all the financial analysts and Wall Street and the UK global markets. I still believe that we are definitely going into a bear market. We are below the 200-day moving average across the board, and that is also a pure sign of a downward trend. So it is an interesting one on copper. but overall you can expect markets to fall further. Looking at oil, OPEC's increasing production on oil, looking to increase production on oil. As a result, oil came off a little bit, but I'm still bullish. That's going to go well above the $120 a barrel. Bitcoin is hovering above the 30,000 level, and that's also likely to come off. I can't see Ethereum or Bitcoin holding any of these levels, and I expect them to fall further. Gemini, the crypto exchange, is calling a crypto winter and is laying off 10% of its workforce. 10% of Gemini's crypto exchange workforce is being laid off. That is a very, very bad sign. And Gemini's head, Winklevoss, has said that the crypto industry is going to go through a major contraction. So again, be specific for all viewers, Bitcoin is going down to below 20,000. As regards high-tech stocks, any rise into high-tech stocks, into the Nasdaq, sell it, sell the Nasdaq. It's going down. This is Mayor Walensky with Driving Markets. Happy Jubilee. You can catch me on Instagram, YouTube, obviously, WhatsApp, Twitter, LinkedIn, etc. Have a good day.